Hi guys, thank you so much for joining me in another video. Today I want to talk about gold. Yes, should you invest, shouldn't you invest? What's the situation here? Gold is touted as a cure for all evil. I know, imagine. People tend to think of it as a positive hedge in case the economy collapses, for example. And they have this illusion that it will hold its value, and it really isn't impacted by economic downturn. It is recognized globally as a precious metal across all countries, across all cultures, and it's readily exchanged. So now you can see why it sounds like an appealing investment, if anything. Speculative trading is rife. I recently received a comment on one of my videos about what my opinion on gold was, and so I thought maybe I should make a video just explaining my thought process a little bit. In short, I'm not going to be investing in gold anytime soon. Yep, okay, see ya, bye. No, just kidding. So what is my opinion? Here I'm going to talk about the top reasons why I don't invest in gold. The first reason I don't invest in gold is no one really knows how to value it. It has no intrinsic value, and the value is strictly determined by what other people's perception of it is. So Bob down the road might think my gold is worth £60 a kilo, whereas Susan down the road this way thinks, no, it's not. It's only worth half that much. So because it has no intrinsic value, it's not like you can eat it or drink it. You know, its worth is determined by how much it's worth per gram or per ounce. There was a time where people would value an ounce of gold would be worth the same as a quality man suit. So you can see where this thought process comes from. There are a number of sort of factors that can determine how much gold is worth. For example, the manufacturing cost, the mining cost, all of those single elements unified will sort of give you a manufacturing value or something to bring it to the table. So, but all that is a little bit of faff when you think about it. As an investor, we think about opportunity costs and value costs, and if you can't really value something properly, then there's just a lot of risk associated with investing in it. Let's take another physical asset example, say houses. You can rent your house out, and the amount of rent that you get divided by the house price will give you the rate of return, okay? And based on that, you can use that value to determine how much that intrinsic value will be. Let's look at businesses. If you want to invest in a business, you will look at the balance sheet, you will look at how much profit that business is turning, and that will be the intrinsic value. Then as a shareholder, you will technically hold part of that business. So as the business grows, the value of that one particular little sliver of share that you've bought will also increase. And so the theory is, as a business grows, the value subsequently grows, making your slither worth a lot more. Second point that I want to talk about is all the gold that comes from the ground sits in the ground in a vault. So what's the point of that? The point is, there's not really any real use for it. I mean, there's jewelry, small components that you might make out of gold, but really it doesn't have any particular use. If you put an amount of gold into your vault today and open up in 5 years, it will still be the same amount of gold. It isn't an asset generating investment. Thinking about it, gold is just a speculative investment, and the value of it can actually turn on the flip of a coin. There was a joke in there somewhere. So let's look at gold on Stockopedia. As it got dark all of a sudden, I don't know if it's about to rain. But let's look at the graph of gold on Stockopedia and see how it has performed over the whole coronavirus crisis.
We're going to compare two types of investments. So firstly, we're going to look at the Vanguard VTI ETFs. The Vanguard generally tracks the market performance of the US stock market index, as it includes all small, mid and large cap companies. We compare that with the iShares Gold Trust, and the reason we do that is because we're never going to hold solid gold bullions, are we? So the iShares Gold Trust seeks to reflect generally the performance and the price of gold. Okay, so I've opened up Stockopedia here, and I generally use this platform to compare and review any stocks, ETFs that I'm looking at or looking to invest in. It nicely pulls in all the data in one place. So looking at gold then, which is the ticker symbol for that is IAU, so you just put that in here. So the iShares Gold ETF, just before we went into lockdown here, you can see on the 19th of March was selling at 14.04, and as we sort of go through the lockdown period, you can see there's lots of peaks and troughs where there was uncertainty in the market, but then up until, let's say, where we're at the end of it here on the 5th of June, it closed at 16.06. So definitely, if you were to buy gold just before all of the market uncertainty and just before lockdown, you would definitely have made some money on that if you were to sell today, or rather Friday, as I'm recording this on a Sunday. So now compare that to the Vanguard VTI. Same thing. Vanguard was going at 119.8 at that time. And again, we see that the same sort of trajectory as gold. We see the peaks and troughs in the market as the prices react to the market news, and then it closes again at a high. So we see where it's closed on the 5th of June. As of 5th of June, we've got 161.77. So we have made some money on there if you were going to invest at the bottom of the peak at just before we went into lockdown. So just looking at the percentages then, if you invested in gold just before the lockdown and were to sell just now, you would have made a 14% return, which is great. Compared to Vanguard now, if you invested in Vanguard just before the markets went crazy and went into lockdown, you would have made a 35% return. So based on that, we can see that during an economic shock, the data doesn't really support gold as a good hedge.
Corrections and crisis give you the opportunity to invest in the market when the markets are low, giving you the opportunity to bring the average cost down, like I was speaking about in my last video. I'll put a link here somewhere. Remember that dollar cost average? I'll put a link down below. The bulk of my investments remain in total equity funds. Companies tend to create value for consumers over the long term, and a typical index fund can give you returns of up to 7% over a 10-year period, and there's nothing wrong with that. That's pretty good. And there's nothing wrong with being average. I'm not Warren Buffett or Hotshot City Trader. I want to stick with investments that are robust and secure. If you are going to invest in gold, it should be just before an economic recession. But who even knows when a recession will be? Like, do you have a crystal ball there somewhere? You might as well stick a finger in the air and try and figure it out. There are some YouTubers out there who have done a bit of a U-turn when it comes to their opinion on investing in gold. And that's absolutely fine, if that works for you. However, I'm in it for the long haul, and I have a longer investment horizon to look out for. So for me, I won't be jumping on any trend bandwagon either. I have this really great book by Ray Dalio on my shelf. He's a billionaire hedge fund manager. He's talked about having an all-weather fund, come rain, sun or shine, global pandemic or not. And he said allocate 7.5% of your portfolio to gold. By doing that, you've diversified your portfolio a little bit more. And that's completely fine. It's completely fine if you're a billionaire and have 20 billion in your bank account, and you're trying to diversify your portfolio. Because if you have 20 billion, your aim is to keep that 20 billion. But if you have 100 grand, your aim is to grow that 100 grand. And for that reason, I won't be investing. I'm out. So think about that for a second. So how much do you want to de-risk or risk your investments is basically the question. By the way, if you have figured out how to make money from gold, then do share it. We would all love to know down there. Leave a comment in the box below. Either way, I won't be copying it anyway. But for now, that's all. I felt like I've had a quick chat with you guys. Please comment, subscribe, like if you think this resonates with you. Otherwise, until next time, I'll see you soon. Cheers, bye.